Let's go again, chapter 10. Cost, volume, profit analysis. Let's go quickly with the start, because I'm assuming that you forgot everything. Now, why do we need this analysis? Because we want to find the effect of the change in the cost and the volume, and how this change is going to affect company profit. Obviously, it's a critical factor. This one is for the management decision and the profit planning. And we're going to consider the interrelationship between 5 components, which is one is the volume or level of activity. Second one is the sales price. Third one is the variable cost per unit, which we know is stable. Then we're chasing the fixed costs, which also we know is stable. And the last thing is sales mix. Assumptions. Which is the assumptions here? The assumptions are that the revenue and the cost are linear. What that means? Sales price doesn't change, variable cost doesn't change. But total sales and total variable cost will change. What's gonna drive those costs? The only units that we're selling. That's the only driver. So basically they stay linear and they're driven by the number of units that we're selling. Second, we have only 2 types of costs on the way the costs behave. Either variable, either fixed cost, nothing else. And what we know is that variable cost per unit always stays the same. Total fixed cost always stays the same. Total variable cost going up with the level of activity. Fixed cost per unit going down. Now, next one. Changes in activity is the only factor that drive sales and the cost. That's it. Only the changes of activity. Not the sales price, not the variable cost per unit. Inventory level is the same. Means whatever we produce, that's how much we sell. We're not adding inventory, we're not taking from the inventory. And the last thing is when we have a sales mix, we're not changing that sales mix. Proportion of the sales mix stays the same. For our purposes here, we're gonna use this contribution format income statement, which start with sales. Then we're gonna get the variable cost, and we're gonna come up with the contribution margin. Then we're gonna take out the fixed cost, and we're gonna see operating income. Example will be here. We're gonna have sales, then you're gonna have variable, total variable cost, contribution margin. Fixed cost, total fixed cost, operating income. So you can have a different variable cost, but at the end of the day, you're gonna have line total variable cost. Contribution margin, after that fixed cost, and then operating income. This will be example of the company that we're gonna use today in this chapter during those slides. This is the company that we're doing. This company selling smartphones. So we can see the sales price for the smartphone. We see the variable cost. Total variable cost is $300. Total fixed cost is $200,000. And units that we're selling is 1,600 units. So what we can see from here, if my fixed costs are $200,000, so what do I need to do? I need to generate contribution margin of $200,000 in order to cover the cost. So if we already know the sales price per one unit to sell one phone is $500, and the cost to produce that unit is $300. Every unit is gonna give me $200 profit. The problem is that I still have to cover my fixed cost. So since I know that every unit is going to give me $200, the question is if I'm selling 1,600 units, how much contribution margin I'm getting. And we're getting $320,000. Is the $320,000 enough to cover my fixed cost? Yes, they are. Is there any profit left? Yes, there is a profit left. How much profit? $120,000. So this is the confirmation of what I just said. Sales are $800,000. Variable cost is 1,600 times $300 or $480,000. That give a contribution margin 320. Why is 320 again? 200 per unit times 1,600 units. Then we have the fixed cost, $200,000. Contribution margin in this case is more than the fixed cost, and that's going to give us operating income $120,000. Now let's see per unit. What do we have per unit? Per unit we have 500, 300 variable, 200 contribution margin. So what that means is, if we are the break even, we have to sell 1,000 cell phones. If we sell 1,000 cell phones, we're going to have contribution margin which is exactly equal to the fixed cost. What's going to happen if we're selling one more unit? Well, the contribution margin of that unit is going to come directly to our operating income. Why? Because we already covered the fixed cost. With the 1,000 units, we're covering the $200,000. And once we sell one additional unit, if we sell 1,001 smartphones, the contribution margin from that additional smartphones that we're selling, it's going to come to our operating income. What if we sell two more after the break even? Well, 2 times 200, 400 is going to come to our operating income. Why? Because we already covered the fixed cost. So, in short, every smartphone that we're selling, it's going to give us $200 to our operating income after we cover the fixed cost. So our first objective is to cover the fixed cost. So let's see what you think about this. If I want to increase my contribution margin, what do we have to do?
Variable costs decrease.
D.
D. The variable costs decrease.
Okay, let's think about it. Let's grab this one. And let's move to Excel spreadsheet. Let's see what we know, what we don't know. This is our question. Let's make it smaller. Can you guys see my screen?
Yes, Professor.
So what do we know? We know sales minus what?
COGS. Cost of
Minus
goods sold.
variable cost.
Yeah. Sorry.
We're not doing
And then,
traditional. We're not doing traditional. We're doing the contribution format. Variable cost is going to give me
Contribution margin.
contribution margin. So, how did I get contribution margin?
Sales minus variable cost.
Is equal to sales minus variable cost. Okay, then I'm going to have
Minus fixed cost is called
fixed
operating.
cost. It's going to give me the operating income.
Operating income.
Yeah.
So the question is, how did I get operating income?
Contribution margin minus fixed cost.
Contribution margin minus fixed cost.
Fixed cost.
Okay. So how many calculations I have?
Two.
How many? Two calculations. Contribution
two
margin is calculation. Operating income is
And
calculation.
then operating income.
Make sense?
Yes,
Yeah,
Professor.
Professor.
Okay. So now let's see. Let's start playing with the numbers. If my sales are 100 and my variable cost is 50. How much is my contribution margin?
50.
50. Equal to this one minus that one. And let's say my fixed cost is 30. How much my
20.
operating income?
20.
Operating income is 20. Okay. That's easy to see, easy to understand, right?
Yeah, please.
So now let's play with the scenario. This is where I am, right? This is where I am. What's my objective here? Company can achieve increase in contribution margin. So what I'm chasing is my contribution margin to become more than 50, right?
Yeah.
That's what I'm chasing. Currently, my contribution margin is 50. Now, first one, fixed cost decrease. So let's decrease the fixed cost. Fixed cost, let's say from 30, they're going down to 20. Is that affect contribution margin?
No.
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 A is gone. Selling price decreasing. So let's leave it back. Selling price decrease. So decrease, that means selling price goes to 80. Is that increase? Did I get what I want? Did I increase the contribution margin?
No.
No. Contribution margin actually is going down.
Down.
So this one is not my option. Fixed cost increase. Let's increase the fixed cost. Let's make it 40. How did it affect contribution margin?
No.
Did
Did
No.
not affect.
No.
Only the variable cost will affect
So
it.
if we decrease the variable cost 40, did they
Did-
increase?
It decreases 60.
Yeah.
Make sense?
Yes, Professor.
Okay. That's how you should answer those questions. Don't jump on the first thing that comes to your mind. Just, analyze the situation. Play with.
Professor, can I ask you a question? Like, for example, in this option, like, if we there is no option of that, but if the sales increases, then it can affect our CM,
Let's say if
right?
variable cost stays 50. If we increase the sales to 120, yes.
Yeah.
But do we have it as option?
No. But if
No.
there is
Yes.
yeah.
Yes, that's the other option, to increase the sales price. So what affects, so that's why it's important for you to understand what affect the contribution margin.
Sales
There's only
and
two,
variable cost.
sales, variable cost. So if the sales goes up, contribution margin
It will
goes up. If the variable cost goes up, contribution margin is gonna go
affect it down,
down. If the variable cost goes down, contribution margin is gonna go.
increase.
If the sales price drop down,
Sales per round, then
Decrease.
it
Right.
decrease.
decrease. So what we can say, how the sales affect the contribution margin in the direct proportion. If
Proportion.
goes up,
Direct proportion. Yeah.
yes. How about the variable cost? How the variable cost
Indirect.
indirect, right?
Mhm.
Or the opposite proportion. If the
Yeah.
variable cost goes up, contribution margins goes down. Make sense?
Yes, Professor.
Okay. Awesome. Let's keep going now with the. I want you to understand this thing, not just to jump on the answer without even knowing why this is the right answer. The question is, do you understand it? So let's go with this. Okay, the right answer is the variable cost decrease. That's the correct one. Now let's keep going. What else we can get? We can get the contribution margin ratio. How can I get it? Well, we already know sales are always 100%.
Yeah.
Now, what will be the contribution margin ratio? Well, contribution margin divided by sales.
Sales.
What that's going to tell us? That's going to tell us for every dollars of sales, how much going to your pocket,
Mm.
right?
Yeah.
In other words, if I'm selling $1, how much I'm getting?
Yeah.
I'm getting 40 cents. Why? Because the other 60 cents goes to the cost
Cost.
of the unit that I'm selling. Right? So now the question is how we can calculate that contribution margin ratio. We can calculate it per unit. We can calculate it by total sales. How this gonna change? It's never gonna change. So since we know the contribution margin doesn't change, and why it doesn't change? Because we're not changing the sales price per unit. We're not changing the variable cost per unit.
Yeah, it is.
Contribution margin stays the same. So the percentage-wise, they're always the same. Yes, they can increase in total, but they're increasing in the same pattern. And the only thing that drives the cost or sales is the number of units. So in that relation, if we say that I want to increase my sales with $100,000, let's say I'm currently, my sales are $500,000, I'm on break even. If I still increase my sales with $100,000 to $600,000, how much contribution margin I'm going to get from those $100,000 increase?
So it depends upon the percentage.
So we have our percentage. Percentage is 40. If my contribution margin is 40% for every dollar of sales, if I increase my sales with $100,000, how much I'm going to get?
$40,000.
$40,000. Why 40? Because that's 40%,
40%.
right? That's why. There's no magic here. There's nothing like that. It's not like a random number. It's because the contribution margin for every unit that you're selling is 40%.
Because we have kept the percentage is the fixed, right?
So,
There is no
yes,
change. Yeah.
we
So
know.
if even though we play with the numbers, the percentage will be the same of the
Correct.
total number.
Correct.
Okay.
Right? Because per unit, we're not changing the structure per unit. It always stays the same. So let's see the next question. What's the contribution margin?
So, sales revenue less variable expenses.
Right. We already saw that in the formula, correct?
Yeah.
Where was our formula? Let me copy this and let's go here.
Yes,
Copy.
minus 10%.
That's our formula, contribution margin. So what's the contribution margin? Contribution margin is sales less variable cost minus variable cost. What's the sales minus fixed and variable expense? If I get
Operating income.
operating income, right? What is fixed cost minus variable cost?
We have to solve the,
It's nothing. Fixed
yeah,
cost minus variable cost is nothing,
there's nothing.
right? So that's why in the multiple choice questions, there always will be one of the answers will be completely stupid answer. That in this case is our stupid. And the sales revenue less cost of goods sold, what that's gonna give us?
There is a formula.
Think about the first part of the course. First three chapters. What we get from sales minus cost of goods sold.
Net profit.
No, something else.
Gross profit?
Gross margin. Yes. Gross margin. Okay,
Yeah.
let's keep going. Okay, we got this one now. Break-even analysis. What's the break-even? Break-even is the point or level of activity in which the revenue that we're generating, the total revenue, it's equal to total cost. What's the total cost? Total variable and total fixed. So my total sales are enough to cover my total cost, which is variable and fixed. So now, how can we calculate it? We can use the mathematical equation. We can using the contribution margin formula, and we can use cost volume profit diagram or graph. Now, when we're rounding the numbers, we're always going to round up to the nearest whole unit. Now, this is what the question asks you, so be careful when it comes. Always round it up to the first for the next nearest whole unit. However, in reality, can you round up the numbers of the units that you're selling?
Sorry, I didn't get you, sir.
That would be tricky, right? So let's say my cost volume profit analysis shows me that I have to produce 7.75 units. What that means, I have to produce seven. If I'm producing laptop, I have to produce 7 laptops, and the next laptop, it has to be to 75% completed. That means the keyboard is missing.
But
que-
the product can't be produced like that. We
Right.
have to.
Right. So we have to finish it, right? So that's why either you go with the 7, either you go with the
Or
8,
the 8.
right?
Yeah.
So now let's see what will be the formula. The formula will be, if we're using the equation, we already know the total sales. What's the total sales? Well, the sales price per unit times number of units. That's going to give us total sales. Should be equal to the total cost. Well, on total cost, I have the total variable cost, which is variable cost per unit times number of units, plus total fixed cost, which is always the same. And in this equation, when I start working with the equation, what I'm going to have for this company specifically, we're going to have 500 is my sales price per unit, time number of units, which I don't know. I want to find out how many there are. Should be equal to the variable cost per unit, which is 300, time number of units, plus $200,000 fixed cost. Once we flip the 300 units on the other side, it's going to have 500 minus 300, or 200 units, time number of units, to be equal to $200,000. So the number of units will be fixed cost divided by 200. Now, what was 200? 200 was unit contribution margin. And then for the number of units, come up that I need to produce, or to need to sell 1,000 units. If I sell 1,000 units, that's going to give me enough sales to cover my cost, variable and fixed. So, if we have to do this by the equation with the formula method, what we're going to have? We're going to have the total fixed cost as a nominator and contribution margin per unit as a denominator in order to get the number of units. So for the units, match units contribution margin per unit. If you're chasing sales in dollar amount, now we have to change this one. Unfortunately, I cannot go inside. It doesn't let me, but I have to go and change this as a contribution margin percentage. So in this case, I'm chasing, if I want to get the in dollar amount, I need contribution margin ratio. So if I have to calculate it, fixed cost is 200,000 divided by 200 contribution margin per unit is going to be me 1,000 units. And those are the units that I need to sell. If I have to express it by the total sales, it's going to be how much will be the, if I know the contribution margin, which I need to cover my fixed cost, and I know that only 40% of the sales are that contribution margin. Question is, how much are my sales? When I apply 40%, I'm going to get $200,000. Well, your sales should be $500,000. And now let's go with the graph explanation. The last method is the graph. On the graph, we're going to have one line for the sales, one line for the cost, And then we're going to have volume. Those are the dimensions, the 3 dimensions. We're going to have volume, cost, and profit. We're going to have sales. Always remember, sales start from 0 and always goes up based on the number of units. Variable cost, same thing. Start with from 0 and goes up with the number of units. Fixed cost, it's always stay the same. So we have to find out where is the point where the sales cover all the costs. And that's going to give us where is the zone of the profit and where is the zone of the loss. Which advantages when you see this graph is provides you can visually see it. You can easily read the level of activity and range of the activity that you need to achieve. And it's easy to make it. Which are the disadvantages? You might not get it on the plot that you're making. It might be somewhere in the future, which is very hard to put it on the graph. It can go outside of the graph. It doesn't show you exact how the cost changes with the changes in activity. So for that reason, we have to use a different method and can only be used in the single product. If we have mix or single product mix, if you have more than one product and one more product mix, then it will be difficult. So let's see the graph. This is the graph. As you can see on this graph, we have 3 lines. One line may represent the fixed cost. And that fixed cost always going to be the same. One line represents the sales. Sales starts from 0 and start climbing proportionally to the number of units that you're selling and the contribution margin per unit that's coming. Next one is the variable cost. What drives the variable cost? Sales. Now, it's an unfair game. Why? Because every month, before you even start selling, you're already $200,000 down.
Yeah, that's a fixed cost.
So what that means, you have to cover your fixed costs right away. And you can easily see it in your life. On the first of the month, which is will be next Saturday, you have to pay your rent. You haven't even started working yet, but you have to pay your rent. And once you pay your rent, that's your fixed cost. So now you're on minus. Now you have to start working. But once you start working, you have to start eating something. So that starts driving the variable cost. So the total cost, as you can see, start way ahead from the sales. So what you have to do, as fast as you can, go to the first point, which is the sales to be equal to cover first, you cover the fixed cost, and then you cover the variable cost. In other words, cover all the total costs. Once you cover all the total costs, then you're going to start seeing some profit. So where is the area of the profit? Anyway, above the break even. Below the break even, we are on the loss area. So now, in this case, that's the line of the sales. The other option, one of the options for the line of the sales, you may have line of sales to be a little bit more, not that steep, but a little bit more smooth. So it's going to go this way and keep going, 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 and keep going, keep going, keep going, keep going, and going to meet the total cost somewhere here or even outside of my screen. That's one option. The other option is sales going this direction and cut the total cost as fast as it can. Which option you prefer?
Straight.
Going straight, right? Rather than going this way and meet
As
the
a slope,
total.
yeah.
Yeah, obviously. So now, what will be the practical application? This one, usually at the beginning of the year, when the year starts, the top executives in the most richest companies in the world start doing this statistical thing. How fast take to those top executive to reach the average income of the people that living in that country? Do you know what's the estimation? For some, it's like 1 week. For some, it's 2 hours. So imagine this on January 1st, because even though it's a start holiday, trust me, those top executives, they don't take in start holidays. On January 1st, they start working at 8 o'clock, and by 10 o'clock, they already have income, which is equal to the average income of the people that living in that country. That would be nice, isn't it?
Yeah.
So I don't know what, then I don't understand why you're so obsessed about that. What's the average? I want to be average. You don't want to be average. You want to be exceptional. So let's go with this one.
I'd say it's C.
Any other suggestions?
Fixed cost divided with contribution. A.
Any other suggestions?
Yeah, it's A. C
But the C can
could also be an answer.
Can we have two answers here? Is it
yeah.
possible? Yeah.
Yeah, the contribution margin ratio
Is it
or
possible?
no.
Yes or no?
But if we divide with margin ratio, also we can find that break-even or unit.
So let's
Yeah.
let's see.
Yes, two
So what
possible
the
answers.
question? Is it possible to have two answers here? On the multiple choice question, is it possible to have two answers correct?
Yes, I
Yes,
believe.
on the
Yes, I
multiple choice.
guess.
Well, how is that possible? Then how the if artificial intelligence marking these questions, how the artificial intelligence gonna figure out which one is the correct one? Or which one is more correct? Again, people, it's multiple choice question. Is it possible to have two correct answers?
Yes.
Yes, you.
Everybody agree. I would disagree, because if I do that, so let's do the next time on your on your test, I'm gonna give you multiple choice question with two correct answers. What you gonna do? You're gonna hate me right there. How is that possible? How is that possible to have a two correct answer? That's not possible. Make sense?
Yes, but
So
Okay.
Sorry. Yeah, we understood.
no. Let's see now. Let's see now. What we chasing? What the question ask?
Break-even
How
point.
break-even point is
So we have two
calculated.
things. Break even, we can calculate it in units,
Oh yeah, in units, yeah.
and in total sales. Right? Those are the 2 points. Number of units, total sales. Correct? Let's use this example here. Sales 150. Let's go with the fixed cost, which is higher. Let's go with 5,000. Let's use $5,000 for fixed cost. Now the question is, how can I get the break even? What do I need? One thing that I definitely need is the fixed cost, right? No questions
Yes.
about it. I need that fixed cost. In order to get the number of units, what do I need?
Sales per unit.
Sales per unit. How is the sales per unit going to help me?
How much we can divide total.
So we're going to divide the fixed cost by something, but what will be that?
Contribution margin per unit.
Contribution margin per unit. So that will be contribution margin per unit. Now, if I'm chasing the total sales, how I'm measuring, what's the unit of measure for the total sales?
Unit into how much?
What I'm using to measure in the total sales?
Contribution margin percentage.
No. I mean, I'm chasing it.
Unit into the
Total contribution
So watch this.
units.
Sales minus variable cost.
Right, sales minus variable cost, we're getting the contribution margin per unit. We get that one. Now, how I'm measuring the sales? What's the unit of measure? What's the unit of measure of sales?
Quantity into.
I'm chasing something else.
No.
If you have sales, how am I measuring the sales? In number of units or number of something else?
Now we are measuring
number of units.
Number of units. If I have number of units, I have two number of units. So one option is to get the number of units that I need to sell. The other thing is to find out how much will be my total sales. What's the unit? How I'm measuring my total sales? In what kind of
cost per unit into total?
No, I'm chasing something else. You to tell me that the total sales are measured in dollars.
Maybe
In
selling
dollars.
price per unit.
So listen, total sales are measured in dollar. That's the dimension that I'm using. I'm using dollars to measure total sales, correct?
Okay.
Can I measure total sales in some other measures?
Sales per unit multiply number of units sold.
No, that will be per unit.
Fixed cost minus
But I'm talking
variable
about
cost.
the total sales. Is there any other way to measure my total sales? Is there any other way to measure my total cost rather than dollars?
No. Fixed plus variable cost.
No, that will be a formula. But at the end of the formula, you're gonna say, okay, this is the number, but what will be the unit of measure that number will be expressed?
Like percentage, 100%?
That will be expressed by dollar amount, correct?
Dollars. Okay, yeah.
Make sense?
Our will be units and the
Now the
amount.
units, so the units of sales, I can express it by kilometers, I can express it by liters, I can express it by hours, I can express it by any different measures. But the total sale, I can express it only as a dollar amount.
Dollar amount. Okay.
Make sense?
Yeah.
Yeah.
So, in order to express this as a dollar amount, I need to see how much of that sales as a dollar amount flowing to my contribution margin. For that reason, I'm going to use the percentage, correct? By knowing that sales are always 100%. Then what I need to find out, how much my contribution margin as a percentage of sales. So what's the percentage of the dollar amount that I'm getting from my sales after I cover my variable cost? Make sense? Do you understand that?
Yes.
Okay.
Yes.
So what will be that? I can express it as on the unit level, or I can express it in the total sale, but it's always going to be the same. And in that case, my variable cost percentage will be, ratio will be
50.
sales minus the contribution margin, right?
15. Yeah.
Right. So now, in order to find my total sales here, this is the one that I don't know, right? This is the one that I don't know here. I don't know this, but I know my contribution margin is 50%, and I know
Yeah.
my fixed cost are 5,000.
Yes.
On which point I'm gonna get break even? When my contribution margin is
The part
5,000,
equals
So,
is equals to fixed cost. Yeah.
right?
Contribution margin equals to fixed cost will be break even.
Correct. That's the only way I can get here 0.
Yeah.
Otherwise, I'm not gonna get 0. This one minus that one have to give me 0. Make sense? And I know that. So how much will be the sales? Can I find out the sales? Once I know that my contribution margin represents 50% of the sales, how much should be my sales?
10,000.
10,000, right? So what will be the formula? Here I'm going to use contribution margin percentage.
Percentage.
Mm.
So what you have to remember is, in both cases, fixed cost is nominator.
Yeah.
But what we're changing depends what we're looking for. If we're
Okay.
looking number of units,
Then we'll be dividing by unit.
Units.
contribution margin per unit. If I'm chasing total sales as a dollar amount,
Then we'll be saying on percentage.
I'm gonna then use the contribution margin percentage. Make sense?
Okay, so the C will
Yes,
be the
Professor.
answer because
Yeah,
we
that
C
is
will be C
the
will be the
correct
correctly
answer.
clearly
Yeah.
now it's clearly correct answer, right?
yes.
Yes.
Why?
Now,
Because we're chasing number of units.
yeah, now we'll not be confused because if it's talk about units, then we'll be divided by units.
Right.
If it's talk about sales, then only the margin ratio. So I was wrong in that.
Okay. Now we can easily make a distinction now between what is the first one, what measure the first one, what measure the third one.
Yeah.
Okay, great.
Thank you, Professor.
You're welcome. Okay, let's keep going with this. So now, what we're chasing? Target income. Right? What's going to happen if we are sick of being on the break-even and we want to go further? Well, what we have to do? Whatever we want, we have to add it to the fixed cost. And that's how we're going to get it. Make sense? So if the company wants to generate additional $120,000, they have to make sure that the contribution margin that they're going to get is going to be enough to cover the fixed costs, plus to give them what they want. So if they want 120,000 and my fixed cost is 200,000, my contribution margin has to be $320,000. And that's the only scenario that are going to cover $200,000 and I'm going to have $120,000 extra left with me. The question is, how many units I need to sell? 1,600 units. How much my total sales should be? 800,000 units. $800,000. If my sales are $800,000, then my contribution margin will be $320,000. I'm gonna cover my $200,000 fixed cost, and I'm gonna have $120,000 left. Now, if we add the taxes, then become a little bit more interesting, isn't it? So now, let's go back to the Excel spreadsheet and let's play a little bit with the Excel spreadsheet. So what we let's get rid of this. Let's get rid of all this. No, we can skip this one. Let's get rid of this. So now we know that in order to get the break even, I have two formulas to use. correct?
Yeah.
Those are my two formulas that I can use. One option is going to give me number of units. The other formula is going to give me total sales. Perfect. So I get rid of those one. I don't need those one. Now let's go and do our more interesting scenario. Let's increase that fixed cost. Let's make it like a 60,000. Right, at this point, my income is this one minus that one. So obviously I'm losing money, but that's not important right now. Important is that I know my contribution margin per unit. So if I know my contribution margin per unit, I can easily calculate how many units I need to sell to get the break even. And I need contribution margin ratio to calculate the total sales. The next thing that I need is fixed cost. So if I know this, can I calculate how many units I need to sell? So the number of units will be equal to what? Fixed cost divided by contribution margin per unit, right?
Yeah.
Do I know my fixed cost?
Yes. 60,000.
Fixed cost is $60,000. Do I know my contribution margin per unit?
Yeah. 50
I know it. That's equal to $50,
per unit.
right?
Yeah.
Now, can I calculate my number of units that I need to sell?
Yes.
For the break even is going to be equal to this one divided by that one.
200.
So if I sell 1,200 units, I'm going to get a break even, correct?
Yeah.
Let's see if that's going to work. So let's say we're selling now 1,200 units. My sales will be this one time that one.
Yeah.
Let's make it a little bit bigger.
120,000.
20, my variable cost will be 50 times. This one's gonna be that much. My contribution
That's
margin will be this one minus that one. My fixed cost is gonna stay the same, right? Fixed
And
cost are
then
fixed cost. And my operating income is equal to 0. So I'm not losing money, I'm not making money, I'm perfectly 0. Correct?
Yeah.
Percentage. Sales are always 100%, right?
Yeah.
How much my contribution margin variable cost
50%. 50%. The same
divided by
percent.
same percentage, right? It's not gonna change.
Yeah.
And the contribution margin is the same. This one minus that one. 50%. Okay, perfect. Now, but I want to make more money. Let's go desired income. Now be operating income, right?
Yeah.
How much you want?
We want 80,000 more.
80,000?
Yeah.
Okay, you want $80,000. So what do you have to do? I have to, on the fixed cost, I have to add the 80,000. So what do you have to do? I'm
First-
still gonna use this formula, but a
Okay.
slight modification.
Yeah.
Plus
Fixed cost plus operating income.
the one that you want.
Divided by CM in unit.
Right. So, do I know my fixed cost?
Yeah. 60,000.
They haven't changed, right? They're still 60,000. Do I know my contribution margin per unit?
Yeah. 50.
Still $50 per unit. Do I know how much I want?
Yes. We want 80,000 more.
80,000. Can I calculate how many units I need to produce?
Yeah. 60,000 fixed cost plus Amount divided by
number of
cost.
units. It's gonna be equal to, let's get this one here. It's gonna be 60 plus 80
80,000 divided by
divided
50.
by 50. So if I produce here 2,800 units, if I sell 2,800 units, I'm gonna get what I want. Let's see if that's actually gonna work. 2,800 units. And let's copy those one and move it here. And let's start 2,800 units. That will be this one time,
280,000
this one time, that one.
in 100, yeah.
And then I'm gonna have
$50.
$50 per unit time 2,800. Did I get what we wanted?
Yes.
Yes, we get what we wanted. This is when we're using this formula. Can we use the other formula?
Yes.
Yes, we can. What's gonna change? Well, not much.
Just the percentage.
Just
Only
the
will be
percent, right.
divided by the percentage.
So now the total sales will be equal to fixed cost
Fixed cost plus
divided. No. Let's go with the break even first.
okay, contribution margin in
Percentage. We know those two. Let's put it where we can put it here.
50,000.
So 60,000 is my fixed cost. Contribution margin ratio here. Contribution margin percentage is equal to
50%.
50%. So where's my total sales?
In sales equals to fixed cost divided by contribution margin ratio.
Will be equal to this one divided by 50%. So 120. Is it 120? Yes, it is.
Yes.
Now let's go desired. Let's change this desired income to how much you want now?
$150,000.
150,000. Okay. So what we have to do? Slightly modification. What will be our modification in this case? In this case, we're gonna get to my fixed cost, I'm gonna add plus 150 that I want. So fixed cost, I know my fixed cost equal to 60,000. Contribution margin ratio, I know it 50%. I want
150.
150,000. So how much will be my sales?
Total sales equals to
60 plus 150
150
divided
divided by
by 50%. $420, is that how much you're getting?
yeah.
Okay, let's see if this is true. If this is a true, right? Let's see what's gonna happen now. If my sales comes to be 420, right?
Yes.
If my sales are 420, what I know my contribution margin is 50%. So how much will be my contribution margin in total?
210.
210, right?
Yeah.
If it's 210, that means the variable costs are this one
210.
minus 210. So where's the ratios?
150.
Same ratio, right?
Yeah.
Oops, there's too much circulation here going on. Let's go back. So that will be 100%. That means this one will be this one minus that one, 50%. Now the fixed costs still the same. They're not changing, 60,000. How much my operating income now?
What one? Sorry. 210 minus 60,000.
Is that what we wanted?
150, yeah.
Did we get what we wanted?
Yes.
Yes. So means the formula works. So those two formula will be the one that you have to use. Okay.
Yes, Professor.
All right. So now this is when we get what we want here, our operating income to be that much. Make sense? And same thing here. We want my operating income to be that much. Now I'm gonna copy this, or actually I'm gonna flip it on the other one. So now we have another problem. What is that problem? The problem comes with whatever we get as operating income, there's another person on the line that wants something. Who is that person?
Government tax.
Government, yes. So what we have to do, we have to do tax expense. We have to pay taxes, right? That's the problem. That's the only problem here. And after we deduct the taxes, what we're gonna have?
Net income.
After tax, right? That
Yeah.
will be the net income after tax. This is the problem now. And why is problem? Obviously, because let's flip this one a little bit. Insert here, I'm gonna push them a little bit right. Let's see if this is gonna work. Yeah, it should be working. Okay. Have all the formulas and everything that we have all the way here. Okay, so now net income after taxes. Now let's say the tax rate is how much? Give me tax rate.
5%.
Oh,
13. Maybe 13.
go up. Let's go with 20.
What?
20 is more realistic. It's even though it's higher, but let's say 20%. So what that means?
Our operating
So
income.
if I'm on a break even, this was my break even point, right? On the break even, how much my taxes?
20%
20% time
into
Operating income.
times 0.
Yeah.
So how much is my taxes?
Zero.
0. How much is net after taxes? Net income
Zero.
after taxes? 0. Make sense?
yes, because that's in neg.
Right. Minus this one, nothing. Now, what's gonna happen if I'm generating
Income.
80,000? Now I have to pay taxes, right? Are you guys with me?
Yes, Professor.
I have to pay taxes, which is 20% of 80,000, that's 16,000. So how much left for me? 64, right? And if I want 150, that's what I want, I still have to pay 20%. So I have to pay $30,000. And if I pay $30,000, how much left for me?
64,000 only.
120,000 only.
Yeah.
Now, but I don't want 64 here. I don't want 120. I want 80,000. And I want 150. Make sense?
Yeah.
So what do I have to do?
We have to increase our
I have to increase my number of units, right?
number of units or number of cells.
So what do I need? I'm chasing now, I want here to be 80. But I know that here I have to pay taxes, which I don't know how much is. I know the percentage of the taxes, but I don't know the amount. And I don't know this amount either.
Yeah.
Right? That's what I want. So now I have to increase my operating income that I want here. So basically, instead of 80,000 here, I have to put more because I want my desired after tax
Operating income
tax
plus
income
tax.
income net income to be 80,000. Make sense? Now I want desired after tax net income to be 80,000. So here I want to get 80,000 or here. How can I do that? Well, first we have to do some small adjustment. What will be the small adjustment? Do I know how to get my net income after taxes? Well, I know it, right? I have to have operating income
Income
time in bracket I'm gonna have operating income. No, operating income minus in bracket I'm gonna have operating income time tax rate, which is 20%. Let's say tax rate. It has to be equal to $80,000. Correct? Now the question is, how much should be my operating income? Make sense? Are you guys with me?
Yes.
Okay, so how can I find my operating income from here?
You need to increase it by the percentage tax.
Correct. How can I do that?
Well, I would just multiply and add the 20% to the operating income.
20% to the operating income. So if you add here 20%, so you're telling me if I get here 80,000 times 20%, if I deduct here 20%, I'm gonna get, so this one, so I'm gonna add this here 20%, right? So you say time one plus 20%, so I can increase it with 20%. So now we 96, and if I deduct here this one time 20%, that's gonna give me here equal to this one minus this one's gonna get 80,000. Doesn't work
No.
that way. No. I need something else. Do I know my tax rate?
Yes, 20%.
Yes, 20%.
So it's 20%. So what do I have here? I have operating income minus operating income times 0.20 or times 20%, correct? And that should be equal to 80,000. Make sense? Are you guys with me?
I was with you, but that's what I said, that if you take your
So watch
operating
this.
income times 20.
But what do I have here?
So it basically means operating income minus
Operating income, but my
income
operating
into 20%.
income here is 1. So that means operating income times 100%
Operating income is 1 or
minus
100.
operating income times 20%. It should be equal to 80,000. So
Okay.
so what I have here?
Professor, I didn't get it. Like our operating income is 100%.
When the operating income is 100% is the operating income, right?
Okay.
But then I have the tax rate, which is the operating income times the 20%, correct?
Mm.
So what will be here? Operating income. How much of my operating income has to be equal to 80,000? Operating income times 80% should be equal to 80,000, correct? If we just follow the formula. Are you guys with me? How can I
Can we
express
do
the...
it again, Professor, one more
Yes,
time?
but
Sorry.
let's get this one first. Let's get it here. So, watch this. Desired after tax net income is equal to that. So what do I need? How can I get it? Think logically here. I have operating income, correct? Operating income. From that operating income, I have to deduct calculation of my operating income time tax rate. Correct?
Yes.
And those two should be equal to 80,000. How much is my tax rate?
20%.
20%. Now I have operating income as a whole number, which is 100%. And I have to deduct from that 100% only 20%. Make sense?
Okay.
Yes.
Yeah.
Right? So I'm going to have here operating income times
Right.
100% minus operating income
20%.
times 20%. 20%. Make sense?
Yes, Professor.
So now, operating income times 100% minus operating income times 20%, how much is that?
80%.
80%.
80%. Operating income times 80%. And that should be equal to $80,000. Correct?
Yeah.
How much should be
So
operating income?
basically, you are saying that like when we calculate, it's like operating in like we keep sales as 100%. So we
Right.
have to keep in mind
Yeah.
operating income is also like 100%
Yeah.
one, right?
Right.
Yeah. Okay.
So now how much is my operating income? It's going to be equal to
80,000
80,000
divided by
80,000 divided by 80%.
divided by 80%. Make sense?
Hmm.
Yes or no?
Yes.
Yes.
Yes. We got
Okay,
it.
let's see if this is going to work. Because you can say, oh, no, that's not going to work. Let's find it. How much is that? 80 divided by 80%. $100,000. So if I put here $100,000,
Yes.
how much is my income?
80,000.
80,000. Is that what I want?
Yes.
Yes.
Yes. So now this is one way to calculate it. Let me show you the other way to calculate it. We're still gonna start with this. This is the starting point here. I want you to kind of see it clearly. This is my starting point. It's all math. After that point is all math. Nothing else, nothing scary. So let's flip this one right here. So the other way you can do it is operating income minus,
1 minus tax.
no, hold on a second. 0.2, 0.2 operating income. Correct?
Yeah.
Because operating income here is operating income minus, in brackets, we're gonna have operating income time 0.2,
Yeah, this,
right? And that's gonna be equal to that one. Now, what I have, when I open the brackets, I have operating income minus 0.2 operating income equal to 80,000. Make sense?
yeah.
So how much I have now? Operating income minus 0.2 operating income, that's gonna give me
Sorry, Professor, what did you?
0.8. So operating income minus
Yeah, that is
0,
always a 1. So
that will be
0.8
gonna give me 0.8
operating income.
operating income to be equal to 80, correct? So now operating income is gonna be equal to
80,000 divided by 0.8.
correct.
So
80,000.
what we can do is, Professor, like it's like the operating income divided by, and we assume 100 minus that, and then we divide with that.
Exactly. That's the other way to do it.
Yeah, so we don't need to recognize like a formula. Just
Right. You don't have to recognize the formula, but
Yeah.
listen, in order to use that one, in order to use this formula, which is the how I'm gonna get the operating income, it should be equal to whatever you want. In this case, 80,000 divided by 1 minus the tax rate.
Yeah.
That will be the proper way to do it. But in order you to understand it, I want you to see how this works.
Oh, before I knew the formula, but I didn't know how it came. Okay.
Right? Because it's more common that you know the formula, but you don't know from where the formula came from.
Yeah, yeah.
I want you to understand where the formula is coming from. So next time when you use it, and if you make a mistake, you can go back to the where the formula came from and fix that mistake.
Yeah.
Right? And now I don't have to remember the formula anymore.
Yeah. Because previously I used to remember the formula. Now, like, it's just divide by 100,
Right.
the remaining percentage.
Right. So what we have to do now, we have to adjust what we want. Correct? So if we
Yeah.
want here $100,000, if we want $80,000 after the taxes, so what I have to do in here in my formula, I have to adjust it instead of 80 to put 100. Make sense? Now this is going to increase the number of units. So I need to sell 3,300 units. And when I sell 3,300 units, I'm going to get operating income $100,000, which after deduct my taxes, I'm going to get 80,000 that I wanted in the first place.
Right.
Right?
Yeah.
Yes.
This is one slightly, I'm not going to test you on this one, but I want you to see the tax implication. And the same thing with this 150. If you want 150 here, what do you have to do? Now you know what you have to do. You have to get operating income that you want, and that will be 150,000 divided by 1 minus the tax rate. And that's going to be the new number here. It's not going to be 150. Now I need 150,000 divided by 0.8.
Wait.
187. And if I flip this 187 right here, that's going to change my total sales to be 495. 495, I'm going to get 187, which I deduct taxes, and going to give me 150, what I want. Make sense?
Yeah, Professor.
Okay. That was the twist with the taxes. So I spend a little bit more time, but I want you to understand these things rather than just memorizing the formula. So again, that's how you're gonna see the target net income divided by 1 minus the tax rate. Because that 1 minus the tax rate is gonna give you the increase in the income that you need to cover the taxes and to get what you want. And again, you can express it as we see in the number of units and dollars. What is gonna change? Denominator. As you can see, numerator stays the same. We're changing only the denominator. If you need units, contribution margin per unit. If you need in dollars, contribution margin ratio. All right. So then once they do that, they're going to come up with 2,000 units when they're using the calculation. In the dollar amount, they need to generate 1 million in order to get what they want. So now let's see what we have to do with this question. Do you want me to leave you or we want to do it together?
Anything.
Together, please.
Together, please. Okay, let's copy this one then and go to the Excel spreadsheet. So let's grab one of those calculations that we have, probably this one, and let's flip it here and let's see what we can get. Some of those things I don't need. Let's get rid of those. And I don't need this, but I need this question. So, what do we know about this company?
Operating income is 51,000.
So in this case, they're talking about there's no units, right? Here on the total sales.
So
How much my total sales?
280.
280,000. Right? So let's change those numbers formatting. $208. What else I know?
We know variable cost is our 60% of total fee. And
So the variable cost here is 60%, right? So if my variable cost is 60%, do I know my contribution margin?
40%.
100 minus 60 is going to be 40%. Okay? And what else I know? Nothing, right?
Okay.
Operating income. How much my operating income?
51,000.
51,000. So now, how I'm calculating the net income? Contribution margin minus fixed cost,
is operating.
right?
We just need to find out the contribution margin and then
So the contribution margin, I'm getting the operating income. So I need my current operating income is $51,000. But I know that I'm calculating the operating income minus contribution margin minus the fixed cost, right? We already know that here from those two formulas. So how much my contribution margin? Sales minus the variable cost. I don't know the variable cost, but I know the variable cost 60% of the sales. So how much my variable cost? 280
Divided by 60%.
So 112.
112
112.
minus 51.
So yes,
Yeah.
and how
Minus
much will be that?
61,000.
61. So if I get 61, that's gonna give me operating income 51.
Yeah.
Okay.
So how much was the
दीदी
answer
सारा
now?
लाना है ना 12 भी ठीक
So how
ਤੇ ਮੈਂ
much?
ਨਾ ਪੁੱਛਣੀ ਸੀ
Oops.
ਕਿਚਨ ਦਾ ਕੂੜਾ ਕੱਢਣਾ ਹੈ
Sorry, I don't wanna interrupt. Sounds like a very important conversation. So what's the correct answer here?
61,000, Professor.
Can you see it?
Yeah.
Okay. Let's move on then. Margin of safety. What was margin of safety? Margin of safety is simply calculation between where we are compared to the break-even point.
Yeah.
So in this company, let's see where they are. They're at $750,000, but they know the break-even is $500,000. So the question is, how much is my margin of safety? Well, $250,000. So my sales can drop with $250,000 until I reach the break-even point. I can express it as a percentage. That will be the difference divided by the current situation with the actual situation. That's going to be 33%. So my sales can drop down with 33% before I reach the break-even point. So tell me how I'm calculating this, or what's the margin of safety refers to. What do you think? Are you guys with me?
Yes, Professor.
So what do you think is a possible solution here?
Sales exceed break-even sales because our actual sales minus equals to the break-even. That's
So
the
watch
margin.
this.
Yeah.
So where we are, actual sales
Sales
minus
break-even sales.
break-even sales. Let's transfer it here.
B.
B. Now we're talking about expenses.
Yeah.
Is there any expenses here involved?
No.
No.
No. We're
Only the
comparing current versus break-even, but in the same level. Sales or number of units, right? We're staying on the same dimension. We're not playing with the expenses and anything like that. So the B is the correct one, yes. So now let's see this company, what's going to happen in this company. Now the science analysis raw data of this company. Now what's happened here is they're showing this information. Unit sales price, sorry, I add this information from before, so I have to delete something, otherwise you're not going to understand it. Let's delete quickly some stuff here. So this is my information at this point. This is the information, the only information that we have. Everything else I added from before. And this is the information that you're going to have in the slides. So if we have this information, let's flip it on the Excel spreadsheet and let's do it with you a different way. Let's go to the Excel spreadsheet again, and let me see which one I can grab. I can grab this one and flip it to right here. Probably don't need this one. Let's delete this one, this one. So this is the information that we have here. Unit sales price, cost per unit, and all those things. Also, we have additional information, which is related to the next slide, and I'm going to copy this next slide and going to bring it here. Can you guys see it?
Yes.
Yes.
So now let's start working and see what we can get. Again, we are on the unit level. We're selling. How much is the sales price per unit?
Sales price unit is 400,
$400. Variable cost,
200
$200. Contribution margin,
minus that 200.
$200. Fixed cost,
Fixed cost is 180,000.
100, 1, 2, 3. So that's where we are. So what we're chasing, number of units that we need to sell, correct?
Yeah, units or the
So that the number of units will be equal to, we're going to use this formula.
yeah. Cost,
It's going to be equal to
180,000.
180,000 divided by,
divided by contribution margin unit
200.
200.
so 900 units, correct?
Yeah.
If we
Yeah.
sell 900 units, we're going to get to the break even.
Correct.
Do we have to check it or we're going to trust it?
And check.
Let's check it. 900. Where we are. 400 times 900.
900.
It's going to give us this one. 360. Okay, variable cost. Time
200.
90. 180. Contribution margin. This one minus this one. Is that enough to cover my fixed cost?
Yes.
Yeah.
Where is my operating income?
0.
Zero.
Am I at break even?
Yes.
Yes, we are.
Yes.
So now, the company proposing this. What's going to happen? Let's grab this thing here. Control C and Control V. And let's get this information now. And they're asking, what's going to happen if a new piece of equipment, they add a new piece of equipment to their production line, which will reduce the variable cost by $20. How much will be my variable cost now?
180.
180, right?
Yeah.
Fixed cost gonna go up with
60,000.
60,000. So how much will be my new fixed cost?
240.
240.
240.
200.
Okay. This new equipment will enable company to add new feature to their tablets, resulting new sales price of 450.
Well, price will be 450.
Sales now will be 850.
450 per sales,
450.
right? Now, the question is, how many units we need to sell
Yeah.
to get to the break even?
We have to calculate now.
We have to calculate it. So how are we going to calculate it? Again, using the formula from above. And the number of units will be equal to variable cost or fixed cost
So
divided
fixed
by,
By contribution margin unit.
270.
and that will be, oops, sorry. Let's go on back. So this one will be equal to that one.
Yeah.
So how many units they need to sell? More or less? What they doing before? Before they have to sell this much?
Yeah, but now they have reduced their. They have to sell less units.
This
Is this good for them or bad for them?
Good,
is
because
good.
they can increase their cost by selling less. They can achieve
selling
their
it.
break cost, yes, by
Right.
selling less units of goods. So it's good decision for a company.
Okay, excellent. Okay, let's go back to the slides. So what's going to happen here, when we do the calculation, they need to sell 889 units, which will be the less units than before. Sales mix. On the sales mix is when company selling one or two, more than one product. Yeah, one of, right. So let's say this company is selling two products. They're selling smartphones and they're selling TVs.
TV.
Now, they have a total fixed cost, right? The total fixed cost is
Yes.
that much. But Every unit give them, every of this product gives them contribution margin.
Steve, can you enlarge that? Sorry, Susan.
Right? Every unit give them contribution margin. And also we know what's the sales structure. We're selling
Yeah.
75% of our
Okay.
sales are on the smartphones and 25% relying on the TVs. So now the question is, what's my weighted average contribution margin? So what we're gonna do? Contribution margin for the smartphones times the percentage of sales, plus contribution margin of the TV times percentage of sales. It's gonna give me the number. And that will be my weighted average contribution margin. And this is the number now that I'm gonna use to calculate how many units I need to produce, or to sell in order to get the break even.
Okay,
Since,
so how much in the product line we have to find? Like,
right. So now one of question is, out of those 1,000 units, how many units belong to the smartphones and how many units belongs to the TVs? Well, obviously, 75% of the 1,000 have to go to the smartphones, and 25% of the TV have to go to, so 25% of the total units, 1,000, has to go to the TV. Make sense? So what I have to do, I have to sell 750 smartphones and 250 TVs to get to the break even. Make sense?
Yes.
And once I do that, my sales gonna be 207. Sorry, if I do that by the contribution margin that I'm generating, my total contribution margin will be 275, which is exactly equal to the fixed cost, 275, and that's the proof that I'm in break even. Now, this company, if their fixed cost is $300,000, right? The fixed cost is $300,000, and they're producing two products, indoor and outdoor plant. So we have the percentage of each division. We're gonna see what's the percentage of the sales of each division. 20% of the sales belongs to indoor, 80% belongs to the outdoor. Once we have the percentage per every division, we're gonna get the weighted 40% times 20 plus 30% times 80. And we're gonna get the weighted contribution margin ratio, which is 0.32. Once we get that one, we're gonna use it as a denominator, and we're gonna get the total sales that we need to generate to come up with the break even. So now the question is, out of those sales, how many belong to the indoor? How many belong to the outdoor? Well, obviously, 20% is gonna be for the indoor, and 80% is gonna be to the outdoor. So the total sales that I have to generate is 180. That will be the contribution margin, right? I have to generate the 180. No, that's total sales. 187 belongs to the indoor, and 750 belongs for the outdoor, and that's how we're gonna generate contribution margin, which will be exactly equal to my fixed cost, which is gonna bring me to the break-even point. Let's see if you get it.
if B,
B will be the correct one, yes. And now we're going to the last thing, which is the cost structure, which is how much is the percentage of the variable cost versus the fixed cost. and that's related to the operating leverage. And we can see the effect on the contribution margin ratio. And when one company, one of the units produce high contribution margin, the other one is low contribution margin, then we're going to see the effect of the break-even point. If units with the high contribution margin, if the fixed cost is high, we need to generate more sales in the break-even, where the other one is relatively small break-even. And the last one is the margin of safety ratio. As you can see in the first one, our margin of safety are way higher than the second one. Operating leverage, I'm going faster through this because that's more like for you additional understanding. And the margin of safety is the level of variable cost versus the fixed cost. How are we going to get the operating leverage? Simply calculation between the contribution margin divided by operating income. Or in other words is how many times I have my operating income in my contribution margin. So once we get this number, usually it's a number. How that helps you? Helps you if you increase the sales with 10%, how much you're going to get as an increase in operating income. So if you have your income 2.67 times in your contribution margin, means if you increase the sales with 10%, times 2.67, 26.7% will be increase in your operating income. But if you have your operating income 5.33 times in your contribution margin, if you increase your sales with only 10%, that's going to give you 53.3% increase in your operating income. So what do you think? The cost structure refers to what?
The fixed cost versus variable.
Variable cost. Yes, that's the one.
The D one, yeah.
Okay, excellent. And that concludes this chapter. So, company sells product that has unit sales, that will be per unit, 890. Variable cost, 6.40. And total fixed cost is 99,123. How many units the company needs to sell for the break-even? What do I need?
We have to first find the contribution margin per unit and then we can find.
Can you find it?
Yeah.
This one minus this one?
Mhm.
250. Do I need, so which formula I'm losing? The blue
Unit,
formula,
yeah,
right?
fixed by contribution margin unit.
Right. Any
And
challenges here?
no,
No.
No.
Okay. Let's go to the next one. Give me a second to make some adjustments and I'll be right with you. Okay. Okay, ready? Next question. This company sells, that's total, right?
yeah,
Now we're in total picture. 499 variable cost, fixed cost. also has sales this. What's the first company contribution margin? So let's see. First company 494,123.
It's a mix, right? Sir, with two companies.
Sorry?
Yeah, with the two companies, it's a mix.
Right. No. There's no mix here. They're two different companies. Mix, we can talk only and only if we in the same company we're selling two different products.
Oh, okay. But
Right?
it's just a two company.
This is just a company. That's two different companies. 1, 2, 3. So we have the sales, variable cost 249,780. Can I get the contribution margin?
Yes.
Mhm.
What will be that? This one
Minus
Variable
minus variable cost. Fixed cost 23, 1, 2, 3. Can I get my operating income?
Yes.
This one minus that one's gonna give me the operating income. Okay, we got the operating income. Now, what the question ask?
contribution margin ratio.
They're asking for
Contribution margin ratio.
ratio is
So how much is the variable cost ratio first?
so CM divided by sales. It
By
will come
87. So what's left for the contribution margin? This one
13.
minus that one, 13%. So
We can
if
also
it's
find by CM divided by sales that
yes,
or
yeah,
or
we can do
100
that,
minus.
right?
Yeah.
So if I have to do this for the other company, what will be the difference? Variable
49.
cost, right? 199, 123, and the fixed cost will be 260, 123.
Or 59.7.
Right. And that's all we can get from this question. Okay. Next question. Last year, company reported sales 720,000. Contribution margin 30%, which net left us with net loss 24,000. What's the break-even point here? Right. So let's go. Where is my sales?
720,000.
720. 1, 2, 3.
Contribution margin 30%. That
30%.
of total
If
sales.
the contribution margin is 30%, how much of the sales coming to my contribution margin?
30% of 720.
720 time 30%. What's happened with the other 70%? Where they
100.
going?
Variable cost
The
70.
Variable cost,
Yeah.
right? There's no margin here. The other 70% cover the variable cost, which will
Yeah.
be this one minus that one in this case, right? So now
Net loss is 24,000.
24,000. I'm negative 24,000.
Yeah, 25,000.
Right? So if now we are down, I'm down on this formula, right? From this formula, what I know, what I don't know. Do I know my operating income?
Yes.
Do I know my contribution margin?
Yeah, we can fixed cost.
How much my fixed cost?
Fixed cost is equals to operating
margin minus fiscal.
This one minus that one, right? So now that means that the fixed cost is more than contribution margin, right?
Yeah.
With how much? With 24,000.
Yeah.
So now, once I have my fixed cost, can I get the break even?
Yeah, we can in the dollar.
With the dollar amount. So which formula I'm gonna use? This one.
Percent is fixed cost divided by percentage
Right.
of contribution.
Okay. Okay, next question. If the revenue are 450, break-even revenue is 200, fixed cost is 100, what's the margin of safety?
If in dollar, then
So let's go. What we know. Current. Where is my current sales? 450.
450.
Right? Variable cost, I don't know. Fixed cost is 100,000.
100.
Right?
And that is 200,000 operating.
So now, in this point, that's where I am. Right? So now let's go with this. Now, on the break even, where am I? How much my sales?
Contribute.
450.
We have to find.
Break even is $200,000, right?
Yeah. Sales revenues are 200,000.
200.
200,000. So if my fixed costs are 100%, $100,000, and I know here I'm at zero, how much my
Yes.
contribution margin?
100,000.
100,000. So if I know my contribution margin, can I get my contribution margin ratio?
Yeah, 50%.
Yes.
This one divided by that one, right? So if I have my contribution margin ratio, can I get my variable cost ratio?
Yeah, 50%.
50%.
50%. So this one times 50%. Once I know those percentages, how those percentages changing when they change the level of activity?
Same because
They same the same, right? They're always going to be the same. So
they have
let's say,
changed.
right? So if those are the same, can I predict my contribution margin here and variable cost here?
Yeah, 220.
So that would 225, and the contribution margin here will be this
220.
one times that one, 225. Can I calculate my operating income at this point?
Yeah, 125.
Make sense? So now, but that's not what the question asks. The question asks is what's my margin of safety?
So that means our actual sales minus the break even equals to margin of safety.
So that will be my actual or current
Yeah,
minus break even.
break even.
So since I have it only as a dollar amount,
Yeah,
what will be that?
in dollar.
It's gonna be this one minus that one.
Yeah.
Can I express margin of safety as a percentage?
Yes.
Yeah.
Who's gonna stop me, right? As a percentage, as a ratio, and that's gonna be equal to what my margin of safety of dollars is divided by
Divided by
break even or current? Current, yes.
current.
Yes, that's correct. So what's my margin of safety as a percentage?
55 point.
Right. Make sense?
Margin of safety is always about the current, right? So
Or always current, yes. The difference divided by the current. Always. And the last question for today. Can you guess yet?
yes, Professor.
So now let's think about it. The following information pertained for McKinsey corporations. Once they're selling 22,500 units, they send 22,500 units for $900,000. Fixed expenses are 350, and the break-even point is 700,000 units. So we need the current, we need the break-even, right? That's the current situation, that's the break-even situation. Those are the two scenarios that we have to deal with. Correct? So let's see now. How many units we selling?
22,000.
500. When we selling 22,500, how much my sales?
900,000.
900,000. What else I know? I know my fixed cost, correct?
Yeah,
How much my fixed cost?
350.
350. How the fixed cost gonna change? Between where am I and break even? Is it gonna change?
No.
No.
Point is The same
It's
thing.
still gonna be.
Fixed
Now,
cost
on
base
break even, what do I know? I know how much my total sales, right?
is 700,000.
Okay.
$700,000 is the break even in total, right?
Yeah.
Now, for my current situation, can I get my sales price per unit?
Yep. Per unit
Per unit.
Two.
divide.
I know how my total sales are.
Total sales is this much and current sales
No, the total sales are 900,000,
900,000.
and I'm selling 22.5.
Yeah. Then
Can I
divided
get my
by
sales price per unit?
40.
This
yes.
I
one,
divided it
Divided
to
by 22
yeah.
by
22, $40.
Yeah.
How the sales price per unit is going to change from the current to the break even?
that 5%
No. We're
Oh,
not
that's
Additional $2 per
no.
unit.
No. Forget about this sentence.
Oh,
This
okay, okay.
sentence right now is not applicable. Forget about this. We're talking about here. How much will be
That's
my sales price? If my sales
700.
price currently is $40 at break even, how much will be my sales price?
The same.
Same,
Simple.
Yeah.
$40, right? It's going to be exactly the same. If I know my sales price at the break even now for 1 unit and total sales, do I know how many units I'm selling at the
Yes.
break even? Yes.
Yeah, you
Okay.
divide
Into
So
this
700 divided by 4.
this one divided by 40.
Yeah.
So I'm selling 11,750 units, correct?
yes.
But now I'm at break even. What that means?
You're at
My-
zero.
Into zero.
So my operating income is zero. So
Zero.
then how much my contribution margin?
350.
350. Okay, if my contribution margin 350, correct?
Yeah, you can get
As a
very
percentage, how much is my variable cost?
350.
But 350.
350. Okay.
50%
If
of
50.
my
20.
variable cost is 350 when I'm selling 7,500 units, how much is my variable cost per unit?
the
20.
divided by per unit. This divided by the
By units,
Yeah.
how much is it? $20.
20.
How much my contribution margin per unit?
20.
20. Percentage,
100.
sales is 100.
50.
Variable cost, 50%. How much my contribution margin?
50%.
50%. How those percentage gonna change between the break-even and current situation? Is it gonna change?
It's going to remain the same.
They're gonna remain the same. Let's leave it the same. So do I know my variable cost per unit?
Yes.
20. How much my contribution margin per unit? 20, right? So do I know my variable cost in my current situation?
Yes.
22 times 20. Do I know my contribution margin at the current situation?
Yes.
Yes. Do I know my operating income, my current situation now?
Yes. 100.
Yes.
100.
Do you understand how from one reality I'm moving to completely different reality? Make sense?
Yes.
So now I have the clear picture of this company.
Professor, so it's like if there is nothing said, then the same thing is like break even. That's in the same thing, right? In the current
Correct.
situation, the per
Correct.
unit and we don't
Yes.
need to change.
Yes. So you can see with how limited information, 1, 2, 3, 4 pieces of information, I can create all this picture at the break even with the cost per unit, with the contribution margin per unit, contribution margin ratio per unit, everything that I need to know. Now, what's happened next? Let's start chasing now. If the sales price decreased by 5%, so do I know my sales price now? Do I know my sales price at this point now? My current sales price is how much?
40 per
40.
unit.
$40.
$40.
Now, decrease
By 5%.
by 5%. What that means?
So 40 minus
As 40.
40 times 95.
5%.
95,
Yeah.
0.95.
Okay. Yeah.
So the new price is 38. Correct?
Yeah.
Okay. So that will be my new price. Then the variable cost, what's going to happen with the variable cost? Current
Increase
variable
by
cost. Variable cost is $20. What will be the new variable cost?
22.
Increase with $2. The new will be $22. Okay.
Yeah.
So where we are at this point.
So now we'll be keeping that.
Now I have to
the current.
start working, right?
Yeah.
Let's get rid of this. And let's do it together. What I did. I did something that I shouldn't be doing. Let me see where we were. We were here, right? Let's get rid of this. Okay, so now where we are. This is my current situation. Correct? If I implement the changes, let's copy this and move it right here. With changes, what's going to happen? How much will be my new sales price per unit?
Will be 38.
38. How much will be my variable
20.
cost per unit?
22.
22. How much my contribution margin?
16.
16.
16.
Ratios.
Okay.
Right?
Okay.
Now,
Yes.
where is my income now? My sales.
38 into
This
20.
one time 38.
Yeah.
855. Variable cost. 22.5 times 22.
22.
That will be 36. Okay. 350 is gonna stay my fixed cost, right?
Yeah.
So what's more happen with my operating income?
10,001.
10,000 going down. What's happened with all those ratios?
Contribution
They
margin.
changed, right? Everything
Yeah.
changes. Is it changes in a favorable position for me?
No.
No.
Because it decreased our operating income by
Right.
90,000.
Okay.
We have to sell more products.
So now you can see, and you can see with how much limited information we can go to the break even. Now, the other thing that I can do now is I can calculate the new break even point, correct?
Yes.
What will be my new break even point with the changes?
In unit or
With
dollar?
changes. Both. We don't know how much will be here, right? So what we have here?
Fixed cost.
How many units we need to sell now? We need 350. My new break even here will be 350 divided by 16, correct?
Yeah.
So now I need to sell 21,750. Make sense? This one will be like this. Oops. Control C, that will be numbers. Let's put it as a numbers. I get the ratios the same. So, and my operating fixed cost here, it will be equal to 350. Now I can see what's happened with the break even. Is it favorable for me to moving for the new break even? Currently, I was here.
Yeah, we not favorable, so we have to sell more units now.
Right. Can you see it?
Yes.
In the current situation with the changes, break even went with 21,875. In the current situation, we are way below.
Yeah.
And now you can see where the question is what exactly you have to do with the answer, and from here you can find your answer. Make sense?
Yes.
Yes.